Hi, Larry Gaines with Power Cycle Trading. Wanted to show you this video for kind of one of the better strategies to use when you're trading in a high volatility market like we're in now. So if you look here at this is the NASDAQ 100 futures, and if you look here, this is what we call ATR, average true range, based on a 14-period moving average. So you can see that this was back in February when we had those prior lows of the year. You can see implied volatility had a big spike here below, and then you can see the average true range expanded from, it was trading at like a 65-point range back in January of 2018, and then spiked up in February to 160 point average true range. So when you measure these moves from just from here from February 9th, this low 71 or 61.78, basically from this low 61.70 or so to the high of that day 64.59, that range, that high to low or low to high, that's like 284 points, which is like over $5,000. So the average range, you can see when they expand, there's a lot of intraday opportunity just to trade intraday, because these are huge ranges. So if you look at where we are currently, where the average true range is even greater than it was back in February. So we're 222 point average true range. And if you look at, this low to high from back on the 26th, that was coming in at 58.35 up to that high that day of 63.21. That is, so basically this move here from this low on the 26th to the high, to that high, that's around about a 470 point move from low to high. All right, so that equates to about a $9,400 per contract move, low to high. So these are huge moves. So you can see that there's a lot of opportunity to play intraday moves or intraday price swings or day trades. So let's take a look at a setup from earlier this morning. So the first thing I look for is a volatility squeeze to really selectively trade or select a trade setup. So here you can see this morning, these dots represent a volatility squeeze on the 5-minute time frame. So this is the NASDAQ 100. Then what I want to do is look to see where support resistance is. So if I kind of zoom out here, you'll see that the support levels right here. See back here with, this was on the 2nd, this was yesterday, we had that push up and then failed. And then today we broke above that, came back down. So this is your support level. And that, if it breaks, that's where you want to enter into your trigger. I call it the trigger entry for a short setup, this based on the volatility squeeze. So looking for a potential short to the downside. So the next thing I look at is momentum to give me direction of where that trigger or squeeze will go. Will it go down or will it go up? So we use our momentum indicators. You can see here cycle 1 where my arrow is. So it's negative momentum. Cycle 2 is negative. So that directionally tells us the probability is that this will break lower. So then I identified the support level for it to break, which I just showed you, and then you just put a market limit order in, for that break. So set that up at 62.53 right there, 62.53 market limit order to sell. So that was your sell entry, and then you can manage it a lot of different ways. But you can see here it came all the way down to this low area here at 61.85, and even made a bigger low down here to 61.68. So these are big moves. So basically from this 62.53 down to 61.85, that is about a move of over $1,300, around $1,360 per futures contract. So if you'd set that up there on a short entry and right here based on that 61.85, that's a $1,360 move. And then it even went lower, and then we had that reversal back up, and now you can see how it's flipped back to the downside. So this gives you a lot of opportunities intraday where you can trade with big ranges, have fantastic profit opportunities. But the big plus is there's no overnight exposure. So for example, last night, if you'd been long, you came in long, and then you had that Apple bombshell hit, you can just see the havoc that created in the market yesterday. So here was yesterday, going out, everything was looking rosy towards the close here. Going into the end of the day, everything looked good. And then Apple came out, said that they were going to revise their revenues down, and boom, just exploded to the downside. All right, hope this helps, and talk to you on my next video update. Now, one thing also just to point out is I'll be doing a live course this coming Saturday, January 5th. So if you'd like to join us, sign up for this, and we'll be going through the strategies to use one of them intraday trading to trade high volatility markets. So just use the link here on this email video, and maybe I'll see you Saturday. Good luck trading.